All right, hey everyone, it's 2:20 here on Monday. Let's run through what the charts look like real quick. Bottom line, no change from Friday's analysis. We've turned a little bit more bullish here, and we're going to just continue to echo the statement of, hey, we don't really know why these markets are turning more bullish. Of course, there's some reasons that are pretty clear and understandable in the front months, but we don't really know why the back months are turning a little bit higher as well. Yes, the weather is making it tough to get stuff in, but all in all, it's only April. I mean, it's only April 17th, so we've got a lot of time yet before we can really scream, "Oh my gosh, prevent plant," and we're not going to plant our acreage, you know. But nevertheless, the charts are turning more bullish. All right, so enough of that. Here is the new crop soybean contract. This is November beans. You can see exactly what we're doing here. We've retraced exactly what we did on Friday. You're getting quite a bit of volatility here. You've got a down day, an up day, a down day, an up day. So we'll see what it does tomorrow. You can tell that this is contained within parallel lines, which to us means that this move up is in control still. So because this move here was not contained in parallel lines, this move up is still in control. So we're going to look for higher prices. And yes, we are above our Astra hedge line. Let me show you exactly what that looks like. We closed right on it today. We've been dancing both sides of it now for about 8 days. I think once we break up out of this, we're going to work November beans a little bit higher, and we'll probably come test somewhere up in here. But the market's not out of the woods, but I think it's enough to go ahead and say, hey, we think higher prices are coming, so you probably ought to be thinking about lifting hedges, especially with the strength in the old crop. Old crop was very strong today. It shook off Friday's lower day and Thursday's long shadow and closed right up near the top of it. Very importantly, in our opinion, it closed back above these lows back here, and the momentum seems to be strong, and of course we're well above our hedge line. So old crop beans are getting stronger. Some of the fundamentals driving that are strong crush margins and just overall insecurity about what the just how tight our supply is, right? So when a market does that, it can get exuberant, and you could even think it becomes irrational. And I would look for a move like that if this high right here gives way and this one gives way. So a move above 15 in July, I think, could really ignite some exuberance and get us moving even higher, and have to move this BN2 over or get rid of them completely and put this up into a new 5 and extend this move that started way back in 21. So it's weird that a wave 5 or a B2 correction would last this long. And most of our Elliott wave people that we follow are counting this as a 1-2, 1-2 count, and then we have a new 1 down. But our primary system is this hedge line, and it is more bullish than that. So I think we've got to defer to it until we find some reversal action below here. So this is one of those situations where we have to just slow down and take it a day at a time. And the fact that we're above this line is the only thing what we really need to worry about, because if prices are going to go to $10 on soybeans, they first have to come back down below this level right here. And in new crop, they have to come back down, and they have to take out these recent lows. So we're definitely not out of the woods. I'm not saying we're going to go up forever, but saying that for today, the momentum seems to be strong in soybeans. All right, now let's look at corn. Let's go through all 3 corn contracts, May, July, and December. Obviously, this is May, and it looks very strong, right? Today I think it was up 10. Yeah, this chart says 10, and we're right back to the midpoint of this range here. Certainly it looks to us like we should be climbing higher and putting a challenge on 686, and if that breaks, I see no reason why we won't go pressure 7, because it's a nice round number and something the market would trade from. You've got a bullish leading edge on the cloud. We're trading above where we were 26 days ago. We've got strong momentum, and there's really no reason to think that this won't go ahead and try that, unless we just run out of buyers and something develops in the market that we're not aware of. But for now, up you got to look in new crop or in old crop corn. And in the July, it's really the same thing. It's not quite as strong as as the May contract, but that makes sense, right? Because it's the tightest in May. And if we're able to clear this hurdle right here, we're going to be well above the daily cloud, trading above where we were 26 days ago. And I don't see any reason why we won't go ahead and pressure the upper sixes in this market as well, assuming that some sort of news doesn't come in and derail it. But for now, we're still looking for the news that would propel this thing higher. We don't, this move doesn't make any sense to us come in relationship to the fundamentals that we know of, but this move is starting to pick up steam, and so you've got to just kind of relax it and go with it. And look what happens. In old crop, it's got to reverse and come back down through our daily cloud. So we have very clear and objective places to sell it again if we need to. Otherwise, we need to get out of its way and let it work higher. New crop, we talked about this setup on Friday, and coming from last Tuesday, this is still in control of this market, and now we're starting to pick up steam. Today's open to the close on Friday, 553 to 560, that's 7 cents. Today's was 559 to 566. That was 7 cents. Another day like tomorrow, you're going to have a 3 white soldiers formation built on December corn off the hook of a 13 and bullish divergence. That could get very interesting if we are able to climb above this 576 level. So for now, we got to look up and we got to see exactly what happens, because guess what? If we're going to get bearish, we got to come all the way back down and get through that first in order to ignite any type of bearishness at all. So can the market do that? Yeah, absolutely, because hey, our carryout is projected to grow, and there's no reason that we would get real excited here and go push new highs or anything like that. But on the other hand, you don't know where it'll go, because we don't know what's really driving these fundamentals here. Could just be weather, could be new demand, could be a combination of both that really gets the market excited. We just don't know, so we have to let it play out. Okay, Kansas City wheat. Here's the July contract with Kansas City wheat. We were really exuberant on Friday. Today we tried to sell off, but we ended up rallying. I think there's lots of things going on in wheat that make it bullish. We've covered that pretty thoroughly. The highlights are obviously Russia, obviously our drought, and also some rumors of new demand that we haven't really seen materialize yet. So all eyes should be right here on 866 and then at $9, because if we break that, we're going to go put pressure up on something higher. But for now, this is our hedge line right here. It is just as simple as keep your upside open up above that, and if you're in, and sell it when it comes back down below it. Really a pretty simple and approach here that we're going to take. This is our daily cloud, this is our hedge line, and anything up above here clearly we want to own. And then we'll just be patient and see how it develops. Okay, that's 8 minutes. I think that pretty much covers it. We'll just take it you got to take it one day at a time and see how long these rallies go. The market still is acting differently than what we think the fundamentals should warrant, but we're not going to get in its way. If it wants to go higher, then our job is to get out of its way and participate with it. Hope that's helpful. I hope it generates questions and makes you want to review where you're at and what positions you have on. We'd love the opportunity to go over those with you. So if you will call us, that would be great, because trading futures and options contains risk, and you should only do so in light of your own financial condition. I hope you guys have a great Monday. We'll talk to you again later on.